Hi traders, welcome to my video on the 3 outside down and 3 outside up candlestick pattern. Here you're going to see how you can catch moves such as this one for over 350 pips using a simple candlestick pattern. So the 3 outside up is something that you look for in an uptrend or for a reversal from a downtrend, and the 3 outside down is something you look for as a reversal from an uptrend or in a downtrend. I personally prefer to take candle patterns in line with the overall trend, just because, as the saying goes, the trend is your friend. I prefer to trade with the trend rather than against it. That being said, we have a level of support that was formed here following on from this downtrend. Okay, and then price did move up, as we see here. We have higher lows, we have a pullback, and as we have a pullback here towards the trend line, this is where the 3 outside up candlestick pattern was formed in this instance. So for the 3 outside up, what we're looking for is first of all a bearish candle, so that's a down candle, which is what we have here. Then we want a bullish candle that completely engulfs that bearish candle, which you see this one does here. Okay, and then we want a third candle that closes bullish as well, closes in the up direction higher than the previous candle. So that's the 3 candles we're looking for. Just to clarify, for a long trade, or if we're looking to buy into a trend, we want bearish candle and 2 bullish candles. Second bullish candle should be greater than the bearish candle, and the third bullish candle should be greater, or should close higher than the second candle, which is bullish. And that's the 3 outside up candlestick pattern. In terms of entry, what you can do, or the textbook way many people would trade this, is to just trade on the breakout of the high, okay, of the final candle in the 3 outside up pattern, which would be here. Personally, I find that slightly rigid. I'd prefer to be looking at the overall picture and saying that this is a resistance level as well. Just so happens that the candle did close on that resistance level. So you could have traded this breakout here. I mean, the stop loss is said to be below the 3 outside up pattern, which is here. You could have possibly been taken out. This is why I don't use candlestick patterns by themselves for entry. I wouldn't just buy every single 3 outside up candlestick pattern I see in an uptrend. I'd first be conducting my own market analysis with other candlestick patterns, support, resistance, trend lines, and perhaps some indicators just for confirmation. But you could have taken this breakout. Had you have been taking out the trade here, you would have another opportunity to re-enter on the breakout here. Okay. There's a 3 outside down candlestick formation there. I would personally ignore that, just simply because we're in an uptrend, so I want to trade with the trend. Had you have taken this original 3 outside up candlestick pattern here and you used your stop loss, placed it below the low, you'd still be in this trade. Well, what would that stop loss have been? This is a Euro, US dollar and Canadian dollar 1 hour chart. So a 30 pip stop loss would have been reasonable below this low here, especially when you consider how far the price has moved. This would have actually been a real nice trade to take on this particular 3 outside up. I probably would have been looking for a breakout of this level here. If we just zoom in and show you, following the 3 outside up, I would have wanted this resistance level just to see how price reacts around it. This is I would perhaps wait for the pullback. You can see when it does pull back, it actually pulls back to the trend line, which is here, which could have been another good point of entry. But it seems like a lot of traders were cautious, especially after this consolidation we had in this range here. It would have been a good idea perhaps to wait for the breakout, and you can see from this big candle here, that's probably what a lot of people were doing. Okay, so yeah, that would have been a good trade. As price continued moving upwards, we could have moved our stop loss below the lows after a pullback. So when there's a pullback, just move it below the lows, just locking in the stop loss below the lows. So when price does turn around, we can at least get out with a substantial amount of profit, perhaps closing part of the position on the way up. Last thing I'd want to do is to get in here in a nice position and just, you know, say the stop loss is below this low here, 20 pips, and, you know, you're just going to close the trade out for, I don't know, 50 pips, say a 2 to 3 risk to reward ratio, and leave a lot on the table. That being said, there will be instances where you can re-enter as we go along. Here you can see there's another 3 outside up candlestick pattern here. This is probably a better example, and the reason I feel this would be a better example is simply because the trend has had more time to form. Okay, you're not always going to be able to buy right at the bottom. There's no harm in waiting for, you know, a substantial trend to form. Then you can see, if we just zoom in here, once this 3 outside up pattern occurs, one thing I like about this particular one is it's above this level of resistance here. Okay, which gives us extra confidence that, you know, price has just breached this resistance level, is held up as support. We have the 3 outside up candlestick patterns you can see there. That's the bearish candle with the bullish candle that closes above the bearish candle, and then a third bullish candle. So an entry anywhere there. Yeah, and that again would have been a good trade. Hundreds of pips left in that one. Stop loss below the pattern, if you like. Just the low, the recent swing low there, so around 15 to 20 pips, which again is a reasonable stop loss for the 1 hour chart time frame. You can spot the 3 outside up and 3 outside down pattern on any chart time frame. I just prefer the 1 hour charts and above, simply because there's more price action included within them, and thus I find the signals tend to be more reliable. It also means less time chart watching, which is a bonus. I mean, if you can pick 300 pips, trade in a couple of weeks on a 1 hour chart, I'm not sure why you would want to try and scalp the 5 minute chart all day long. And, you know, say you're scalping 10 pips on a 5 minute chart, it will take you 30 consecutive winners to make 300 pips. And that's not even accounting for broker spreads, commissions, slippage, and any other fees. Okay. So on the way up this trend, you can see there's multiple re-entries with the 3 outside up pattern. Not all of them are going to be good. When you catch a nice trend like this, it can be a good way to time your entry. That being said, it won't always appear where there's a good entry, because, you know, you could have traded this little pullback here in a breakout. There's no 3 outside up there, but it still would have been a decent trade. Okay. But then we have one here. This is a good textbook example. Bear candle, bullish candle, trade, and then this level actually held up as support, which is interesting because it was resistance back here. So we have the extra confirmation for the fact that this line has been proven to have some significance from back there. Okay, we have other bullish candlestick patterns around here as well. I do have lots of videos on various candlestick patterns that you can watch, and be it's good to be aware of as many as possible. Okay. Again, another good 3 outside up trade there, because we have our resistance level, 3 outside up, bearish candle, bullish candle, and a big bullish candle there. However, if you would have entered here, you could have easily have entered previously on the breakout of this resistance level, which, as I said, I don't always use the candlestick patterns for timing the exact entry point. Some traders may use them as a sign of when to perhaps exit some of the position, or where to move a trailing stop, and just to be aware that the market may be reversing. That won't always be the case. Just on another note, as I said, I like to pick the candlestick patterns in line with the trend, and this is a perfect example of why, because you can see this 3 outside down here against the trend is not a good trade. 3 outside down against the trend is not a good trade. Okay, granted, you will eventually capture the start of a new trend, but more often than not, you'll just get whipsawed in and out of the market, especially if trading against the trend. Okay, so now we're going to look at examples of the 3 outside down candlestick pattern, which is basically the same as the 3 outside up, just in the other direction. Okay, so what we're going to look for first is a bullish candle. So we have a bullish candle here, it's actually a spinning top as well, followed by a bearish candle that completely engulfs the initial bullish candle, and then another bearish candle that closes below the middle bearish candle, and that's our 3 outside down candlestick formation. Okay, and again, trading on the low of the final candle in the pattern. You can see this would have been a good trade. We know we're in a downtrend. Okay, it's arguably forming a flag pattern here as well, so there's extra confirmation there. Some traders might have actually traded this first, cross over the line there. Other traders may have waited for this level of support you see here, that level of support, so coming through here just for extra confirmation. But with the 3 outside down pattern, we could have been in around there somewhere. If we just zoom out, you can see this is quite a substantial trend. You're trading on the breakout from the 3 outside down, a profit potential of around 230 pips. The stop loss was placed just above the high of the 3 outside down candlestick pattern. You're looking around 15 odd pips, which is really good for the 1 hour chart time frames, especially when you can catch big trends like this. The trend had formed early on. We had the level of support up here, and we can see the price had been falling for a while. Probably this one would have been, I wouldn't have personally taken, just because of all this ranging and consolidation in the markets, which is, as I said previously, I like to wait for a trend to form. Again, there was some 3 outside up buy opportunities there, but as you've seen from earlier on when we were taking the buy trades along with the trend, they would have been better entries. These, you're arguably going against the trend or just stuck in a ranging market. You want to wait for a breakout such as this, or I would anyway. Okay, so now we know, we've confirmed we're in a downtrend, we've got in at a good point, and we can trail our stop loss. So basically, initial stop would be here. Once price falls, makes a pullback and continues to fall, we can move our stop loss above the recent high. Once it falls, pulls back and falls some more, we can again move it above the high and to this big fall here. I'll probably move around 50% of this bar, and then once it falls, stop loss here, falls again, stop loss here, and by now we're seeing this consolidation and ranging market. A nice level of support has formed along here. We've actually got the market making higher lows, so all signals perhaps to exit our position there. Can always close part of the position on the way down, bank some profits along the way if you like. What I wouldn't do is just leave my stop loss where it initially is and wait for price to turn around and hit it. Never let a winning trade turn into a losing one, as they say. There's a few other 3 outside down patterns on the way. If we didn't take the initial entry, you can see there's one here. You've got the bullish bar, bearish, and then potential entry there. I probably would have been more looking at this level of support. Okay, this is why I say I don't always take candlestick patterns as gospel. I think that would have been a slightly late entry. If you're going to trade here, if anything, it would have been around this breakout. As you can see, that level of support is held, and then it actually becomes resistance there, which emphasizes its significance. That being said, the level perhaps does have some significance later on here from the 3 outside down pattern, but I'd rather get in off there. Some traders may look at this this engulfing candlestick pattern here and just trade that breakout from there. Again, it goes through, you don't need technical indicators. You can use them to filter your trades, but sometimes price action, well, all the time in my opinion, price action's king. It's telling you what's happening at any given time. This is where the you're not going to be right 100% of the time. If you take this one here, bullish candle, bearish, you can see it's not going, it wouldn't have been a great trade unless your stop loss was over 35 odd pips. But that being said, if we were taken out, if we traded it as is and we just sold there and had our stop loss here, we would have been hit for what, 10 odd pips, assuming we didn't break even, you know, after 10 pips. But let's just say, for argument's sake, we got taken out for 10 pips. Then we move along here and you have another 3 outside down pattern. This time we've actually had a pullback, whereas this one, you know, we did have this drop here, but I'm not going to call that a pullback. That's more of a range. Here we've actually seen a pullback. Okay, so that could have been one way to filter and avoid this particular trade. Not to mention the level of support there. We probably would not have wanted to buy against this support level. On the other hand, this 3 outside down, bullish candle followed by bearish candle, another bearish candle, could have traded the break below there, and that coincides nicely with it being a breach of this support level in and around here. Okay, I mean, this is the 1 hour chart. If you honed into the 5 minute, 50 minutes, you'll see that this, you know, is held up a lot more than it looks like on this particular chart. So had we been taken out for 10 pips there, although I've given you reasons why we may not have taken that trade, we still could have got a nice 150 odd pips. We'd have made back our 10 pips and more. Again, trailing stop and locking in profits on the way down. There's another 3 upside down pattern there, which, you know, you still wouldn't have been late to the party. But again, you might have just been watching this support level here and just waiting for price to perhaps breach that if you didn't get in up here, which would have been the ideal entry on this particular move. As we start to get down around here, we're certainly thinking about, well, there's not been a proper pullback like I mentioned just now. That's just more consolidation. Same with here, you know, you're going to end up selling low then. So if we just zoom out, you know, by the time you're down here, I personally wouldn't be looking for sells. I'll be thinking that I've missed the boat perhaps on this one and just wait for more opportunities. You can see as the market starts to move up, and like the buy trades we looked at earlier, there'll be ample opportunity, and there's plenty of trading instruments and chart timeframes you can look at for more trades. Most important thing for me with the 3 outside down pattern is to do it in a downtrend, and the 3 outside up is to look for it in an uptrend. I wouldn't take it as an entry signal every time or an exit signal. I just use it as an extra filter and just to help maybe guide my trades. Okay, as always, make sure you've got sensible money management in place. I hope you found something useful in this video. I appreciate you watching. Please like and subscribe for more. Catch you on the next one.